Hey, greetings. Dr. Jeffrey Scott here with my Market MRI Pro update for April 24th, 2025, and what a bullish day it was in the U.S. markets. Markets break out, and the question has to be, is it a trap? And maybe Google's earnings will make it so it's not. We'll see. Again, my name's Jeffrey Scott. My email address is marketmripro@gmail.com, or my old works too, which was hgsidoc@gmail.com. Thanks for joining me. If you're new to my channel, hit the subscribe button, hit the alarm, and you'll get notified when I do this. I'll tell you a few minutes about a better way of getting notifications. And lastly, if you like what you hear, give me a thumbs up. If you have some comments to make, constructive comments, good or bad, either send them to me via my email, put them in the remarks section. I want to get better. Well, I've been doing this 20 years, but hey, getting better is a good thing too. Let's go. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, specifically my new tool, Market MRI Pro, which we did a soft launch 6 weeks ago, a month ago, and the weekend of May 3rd, I'll bring it out again. We'll have a long session on teaching people how to use it and how to look at top-down trading. You'll have to be a part of my top-down group to get notification. Plus, you'll get a discount if you are. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. And I have tools in multiple platforms, although we're talking about the Market MRI Pro today. If you like live education and you want the best deal in town, come to Orange County, June 6th through 8th, 2025 in Tustin, California. It's a low budget meeting, so it's at the Residence Inn. If you call or contact Greg Mills at that email before the end of the month, it's $300. If it's after the end, it's $400. If you can't attend live, sign up anyways. You'll get a copy of all the videos and handouts. And once the room fills, we'll take it to the internet as well. And hey, you'll get it in cheaper because you got it before the end of the month. So far, I've confirmed John Person, Dan Fitzpatrick, and Chris White. 3 great speakers working on Matt Caruso. Then you'll have myself and Dev Kashav. And I think you'll find a balanced approach to the markets. And it's trading stocks. It's not day trading. If it was, we'd have to have a much bigger room. But it's swing to position trading, stocks and options, and I think you'll really be impressed with the lineup that we've got for this year. I mentioned the better place to get notifications. Sign up for my Google group. It's called Top Down Trader. Costs nothing. It's not for solicitations. Simple. I used to send the video out most nights to friends and family. I start getting spam from my own email issues, even to my own mom. So, I don't think she was trying to drop me because I was spamming her. So I decided to give up on email. So I formed this group. I put something out almost every night. I don't always post them on YouTube. And I may comment during the day if I see something changing, like a big reversal day. It's free. Go to Google Groups, put in your ID, hit Top Down Trader, and you'll be part of the group. News and earnings. We're going into Friday. We got consumer sentiment. Hard to believe it's going to move the market. It's not the first time they've heard it. And we still got some earnings this evening. And I'm doing this at 8 p.m. on Thursday, April 24th. Looking at briefly, the big winner, I guess, is COUR up 7.4%, but Google was up 4.2%. APPF, the big loser, minus 8.4. Skechers down 6.6. T-Mobile, which has been a big leader, down 5.3. And Intel, which has been the opposite of leadership, down 4%. So over the weekend, we'll take a look at next week's earnings, but think about what's coming. Microsoft, Amazon, there's a lot of great stories to be had. All right, let's go to the charts. We'll start here which is I call the daily performance view, where I take a look at S&P 500 sectors. uh, or sectors. We look first. Let's look at the indexes, and the Qs were up 2.8, Spider 2.1, Russell 2.01. The laggard was the diamonds. Volatility dropped. The VXX dropped by 3.69%. Over here, you can see what I really like, that the index ETFs finished at the top of their daily range. This was not a gap and crap day like we saw yesterday. This was a market that opened higher and traded higher the rest of the day. That's a bullish sign. Having the volatility finish at the bottom of the day, that's a good thing too. Looking down here, another risk on day, technology in the lead, up 2.74. The laggard was defensive, right off the three, staples, utilities, and real estate. Now, the only one of those that was negative was staples, but there's a big performance difference between technology and the rest. And lo and behold, for the week, although it's, if you look back, including Thursday last week, 5 days, tech is leading up 5.93. Up here, except for the NASDAQ on the year 12 months, we have mostly new high, new lows being positive when you look at the NYSE and you look at the NASDAQ, and you can look here at the different time frames. So definitely a stronger session. How strong was it? 10 out of 11 S&P sectors were up. 9 out of 11 sectors were up for the NASDAQ. 10 out of 11 for the NYSE. S&P 1500, 83% of the industry groups were up, 78% in the NASDAQ, 84% in the NYSE. And then if you look at what percent of the stocks were up, 83%, 73%, and looks like 80% at 78 and 80%. So there's some little errors there we'll fix. But you could see a super, super strong market. The other thing that's happened is we've started shifting to the right in the buckets or up in the Bollinger Bands, and now 68% of the S&P 1500 are above their bands, the midline, 66 in the NASDAQ, and 68 in the NYSE. That means we are in a more bullish posture, which is a nice turnaround. So down here, some themes, big session on cannabis. I don't pay attention to these cheap stocks, but maybe something came out in legislation. But semiconductors, software, cloud, Internet of Things, then uranium, internet, automotive, and electric are the big leaders. So as I mentioned the last 2 days, it feels so much like 23 and 24 with the rah internet and semiconductors back in the lead. I talked about the buckets with the right shift. Imagine the Bollinger Bands, and you have 10 slices, each slice 10% from the bottom to the top. Then you have underneath, which would be this one, and above over here. Every day I like to look at where the stocks fell in those slices in the major indexes. When they're over at the left, we have a sold off market. When they're over to the right, it's an overbought market. When you start to pile up above the Bollinger Bands or below, it gives you extremes. We are shifting to the right. We have no extremes. We are starting to look a lot healthier on the buckets. The market breadth tool, if we look here, and I thought we had a Eureka last night. I was wrong. We did not. But you could see on the NYSE a super big move closing right off the high. Same thing on the NASDAQ. And these are at the composite level. If you look at stocks above the 20 in green, 50 in white, 200 in red, you could see them all tracking higher as we've moved off the lows. Then up here you have new high, new lows. You can see on the left the NYSE is positive. The NASDAQ 52-week was negative. Advanced decliners strongly positive on both. And up-down volume strongly positive on both. A much more bullish day than yesterday where we retraced a lot of the gains on Wednesday. If we look at the timing model, I think that's important to take a look at right now. And in the timing model, you can see here that on the weekly, on the daily rather, we flipped to a buy signal on the spiders. buy signal on the Qs, buy signal on the Russell, and a still almost flip, but not yet. We could flip on a positive day on the diamonds. On the weekly, we're still in a sell. So what does that say to me? And how do I know we're still in a sell? Because I looked a few minutes ago, but you look down at this line, and as long as it's red, you're in a sell. So if the longer term or intermediate terms say you're in a sell, the short term say you're in a buy, you're retracing in an intermediate downtrend. How will I know that we're not just retracing? When we start to have significant higher highs and higher lows and take out resistance. So right now, it's better than a strong downtrend. We're retracing. Now, one thing that causes some optimism is we had flipped to a sell signal on the monthly charts. And these are probably, not what I trade off of, but it certainly gives you a sense of what's going on in the market. And what you see is that on the longer term charts, except for the Russell, which is choppy, we've gone to long-term monthly buy signals. If we look at the indexes and why I'm excited is if you look at the S&P 500, yesterday on Wednesday it took out the 17-day. That was my first thing it had to take out. On Thursday, it took out the trend line. It was touch and go until late in the day when it had another boost. You look at the Qs. They closed below my trend line yesterday. They took it out today. 2 days ago, yesterday rather, they took out the 17-day. The diamonds, there's another trend line which didn't draw there, but you can see it over here. They took this trend line out, closed above it in the markets on Thursday. So to me, that's 3 out of 3 so far, taking out that trend line. And then you take a look over here, and what you see is so did the Russell. So markets truly broke out. Now, Google is going to drive the NASDAQ, may drive technology in the NASDAQ on Friday. Fridays have been tough to call. There's been some reluctance to hold a lot over the weekends. Right now, the NASDAQ futures are up 93, the S&P is up 20, and the Dow and the Russell are modestly lower. So, pretty impressive move for sure. VIX coming down. I'd like to see it get down to the level it was, still elevated, so maybe a little concern. Excuse me, the dollar didn't do much in the session. If we look at commodities, had a little bounce in gold today. It's a little bit still off its lows. Silver has moved up considerably, although it looks like it finished pretty flat in the session. If we look at oil, oil was down a tad, struggling now at the 17-day. Natural gas has broken down. Unfortunate, it had a nice move off of the 200. And then if you look at the bonds, the 10-year and the 30-year came back down a little bit. So a lot of things to like in the market right now. So my first question as a top-down trader is, what is my direction? So I buy follow-through days. We had a follow-through day a couple days ago. All right, so I started buying, which I said on my video on Tuesday night, that when I saw this bar that I thought was a follow-through day, that I was going to start to take some more positions in the market. I also said that still, since we are in a downtrend, that I wasn't going to go all in. On Thursday, after we gapped up on all the markets and held the gap, I decided it was a good time to add to my positions. Now we go into Friday, and and we'll see how the market looks in the morning. I still have a fair amount of cash. I don't expect the markets to have the same day that they had on Thursday, but I think right now you have to have some commitment to the long side. I put in my title breakout or trap because you could still trap, because now I've got to worry about the falling 50. and then I got to worry about the 200. So I've got a lot of overhead resistance to get through still. So am I longer now? I'm longer than I was yesterday. Am I going to get even longer? I may. But I'm still going to be hesitant. I'm still going to be careful. And I am watching the markets closely. So did I tell you anything? I don't know. We're retracing in a downtrend. If I'm still a downtrend, I have to be careful and protect my cash. But doesn't mean I'm not playing. From a sector perspective, which is the second part of top-down trading, I like to look at these ratio charts. Now, the first thing is this one's not a sector. But each of these are not sector charts nor a Bitcoin chart. Each of these are ratio charts of the instrument versus the spider. So defensive things, as you'd expect, staples came down, utilities came down, real estate came down, even healthcare, which is defensive, came down. And we're finally seeing discretionary moving up in technology. So are we back to where we were in the rah-rah days before this market sold off on tariff tantrums? I don't know, but it's been a fun couple of days if you're still holding some of those or if you bought some. Communications turned up as well. Now, my favorite part of my analysis is when I start to look at stocks. But I don't buy stocks if I don't think it's a time to buy them. I don't sell them short if I don't think it's a time to sell them short. So let me just show you 3 ways that I use my tool to find opportunities in the market. So the impulse list is my basic list, and I've combined the NASDAQ, the NYSE, and the Amex into one list. And then that list is filtered by $1 and 100,000 shares, and I'm left with 3,500 stocks. Each one has an industry group and a sector. If I go on the top down, I have a list of those industry groups over here and the sectors. If I look at one-day performance, we were led by technology, industrials, and communication. So I might say, let's look at those 3 sectors. Well, there's 1,144 stocks. But what I really want to do is let's rank by percentage the industry groups. And what are the top 10? Semiconductors, computer hardware, electrical components, hardware, security, trucking, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now I'm down to 440 stocks. And now I want to go through and review them and see if there's anything that I might like. So I will filter on FM2, which is my 2-day momentum. This is one that had earnings. I think on Wednesday we talked about yesterday, big gap, or actually Wednesday, earnings last night had a major move. If you want to know when the earnings were, you can look up here. It says the earnings were 423. So they were yesterday. You could see the change, surprise, the revenue, the change in the surprise. So a super strong day for ServiceNow, and you could see it taking out its 200 moving average. I have a healthcare tech company. Agentic AI is an important part of what we do, and ServiceNow is very deep into AI. Interesting company. HubSpot, similar story. I believe it's coming off earnings as well. Actually not, my bad. May 14th. So was there news? Somebody came out here and said it was worth buying. So I don't see any news, but you could see it had a nice move up. Have to break above the 200 before I get excited. And I can just go down the list. Empower starting to run. I like buying things that are in uptrends. You know, Pi here had a massive move, earnings related with a big surprise. I mean, they must have thought they were going to screw the pooch because they had no change, but they had 133% surprise. I like Impinji. I'd rather buy above the 200, but this is a nice gap. Got a big gap up, volume, breakout. Breakout was back here. Momentum, relative strength OBV looked good. Not extended. I mean, I like that one. I just would rather it higher up. And I would go down the list to see if anything looks good. Fix. Pegasystems was one that we liked or talked about yesterday, big gap up on earnings. It held the gap. That might be interesting to look at. KLA Kencore's got to get above the 200. FICO, love the pattern. Pullback, sideways move on the 200, and it broke out here. I think this looks beautiful. It's an expensive stock, though, $2,000 a share. So last night we looked at Duolingo as one that we liked, and you could see it held the gap and moved up a little bit. APP was another one we liked, and these things, this one had a nice session, was up 6%, another $15, but on an expensive stock. So I really love top down, and this is a great way of taking those 3,500 stocks and bringing the best up. So let's kill that, kill these. Another thing you could do is just look at the top sectors, industry groups, without highlighting a sector. And now you'll have other things show up like investment banking, which have the best performance. But this is because this is a spurious cheap stock on the NASDAQ, not the regular NASDAQ that snuck in. So we're not going to look at that. But software as a service, software services, another one that snuck in. Yeah, we've got to put a filter to get rid of some of these that, I don't know, our data vendor pops these things up all the time. But you can rank his manufacturing. Nope, another one. All right, now I finally got one. And actually, so this is rental and leisure services. I think all I probably had to do was filter that list by price and volume. But semiconductors was number 2. But let's just look at rental and leasing services, because I like URI a lot. Now, the problem with URI is you're going to say it's like one of those others that's really down in its pattern. But I believe it had earnings come out here. Let's see. Or it's just move with the market. Earnings came out. Look at this tool. I've got the earnings, $8.86 versus $9.15. Well, that sucks. But it was a surprise to the upside. So it's way off its high price. And its revenue surprise to the upside. If we go into this infrastructure build out for this country, which I think we probably will, it's a great way to stimulate the economy. I mean, I think this is something that at some point, whether we call that there and then maybe we're either have broken out or about to break out. I think URI looks interesting. So I might look just at the leading industry groups. I can go back into the JAS list on the Impulse, and I could scan things. So one thing I like to do is my favorite scan identifies 2-day momentum up, put a $5 price in a 500,000 shares, and we'll take that $3,500 stocks down. It was a big number today. And again, I may go through these very quickly. Now we already know that I like this. I think right now, is probably my number one choice for if I'm going to enter the market. SMCI, this one had some really strange financial reporting concerns. They seem to be over, but they're having a hard way of working back. Serve Robotics, this thing, I think they went up because somebody put NVIDIA had an investment in it, and then NVIDIA took their money out. So INOD, this was a recent big mover. I might do some research into INOD. I like the pattern here. It's above the 200. Earnings are not for a couple of weeks. Faro, another one worth doing a little bit of research. Kind of gappy. Was this on earnings? It says the earnings were today, so they're not in here, but they either went up after earnings this morning or the earnings came out. It probably came out this morning, but you can see a big breakout here on Faro. So I'm looking for stocks in uptrends that pull back and give me potential buy signals. ALAB, this was a big leader that pulled back. Sound, another AI stock. So look at this. Serve, Sound, ALAB are all AI stocks. Does that say something? Similar story to Serve, and that NVIDIA invested in and NVIDIA took their money out at the top. Intuitive machines. So I just run through this list looking for things that might be actionable. That's a SPAC. VRT we looked at yesterday. Unfortunately, it had a analyst come out and give it a price target of where it's at. The real, again, not my cup of tea, but technically it's in an uptrend with a deep pullback, broke out about the 50. Again, all of these have those two dots. UiPath, AI to pathology, OKLO, Who down it's, and again, you notice I'm skipping through the things that are well below the 200. AvPoint, again, don't know them. I like it. Why? Because it's, if I look at the weekly to see if it's in an uptrend, it's in an uptrend. Okay. Certainly lost its way here, but it's coming in off the 200. Today, on a big move, took out the 50. So this is a lot cheaper than now, but this is another one that I'm going to put on my short list. So I'll put that to my potential long list, so I remember to go back and look at it. So that's one of my favorite ways to scan the market. And then something else I like to do, and everybody's ever watched me on my wealth charts videos, because I don't have all the scanning tools that I have here in wealth charts, but I've got some great tools there as well. I built in the pullback and uptrend. Let's limit it to $5. Let's limit it to 500,000 shares. That's going to give me a smaller list. And now you'll notice here up and down, I have this thing here called impulses. And I'm not good at making names, folks, so I just go basic. The first one, I use a lot of medical names because I'm a doc. That green line's EMS, and that's an early movement signal. That's one of the first ones to move. The CPR is another buy-sell signal, which is the one below it. And then below that, there's a space intentionally. And then there's 4 dots. Here they are. A gap, in this case a gap down, big volume, breakout, and momentum. The yellow line is a squeeze. It just came out of the squeeze. This is relative strength versus the spider with the moving average. This is OBV. And this puppy here has a lot of blue dots the last 2 sessions. And I like it, but here the top one was EW, Edwards Life Sciences, I believe. Let's see. All right, letting it pull the data because I haven't looked at this one. Yeah, so yeah, it's in an uptrend here and a little pullback, but it's more of a sideways movement. But look at what we have here. Let's put it in a weekly and see if there's anything. So it's been in a downtrend. Healthcare has really lagged. It's not a great choice, kind of double topping it here. So it made its list because what did it have today? A CPR, a gap, a volume, a breakout momentum. A great session for it, but I don't like the pattern. Take 2. Again, these look different. The other ones I was looking for just the 2 days of momentum. Now I'm scanning for things in an uptrend. I like this one a lot. Gap up, sideways move into the 50 and a breakout. Snow. And this is what I talked about over the weekend that looked interesting, and their problem was they had too successful of an IPO, and they've never been close to that price since. But Snow, so the weekly, is it in an uptrend? I don't like, it's kind of a sideways. I'd probably skip it. I liked this one a lot yesterday. Let's look at what Penumbra did. Look at Penumbra here. Big move, but up here, your high-low jump is 65%, and that tells me that it's not extended. Relative strength of 93%. It's a super strong stock. Well, of course it is. The market's been horrible, and this is just short of highs. It's got 4 dots in here coming out of a squeeze with relative strength and OBV. I like that one. So I would go down the list and continue to build a shopping list for tomorrow. HDSN, it's got the dots, but it's so far in the, and it's, I don't chase things that look like that. Hasbro, no. Groupon, it's funny. one of the companies I like a lot, although the stock's been very volatile, is Tempus AI, which is a healthcare diagnostics company, and the CEO is Eric Lefkowski, who went to my high school, uh, which means no matter how successful I could be, I could never be the most successful from my high school. He's a little bit younger than me, but he also brought Groupon, and Groupon's been not a great stock over a long period of time, as you could see. Kind of interesting watching it move up over the last couple of weeks in a tough market. FCFS, I don't even know what this is, First Cash Holdings. Again, if it's in an uptrend, it pulled back, which is what my scan looks for, and it broke out. ALLE, Allegion, it broke out above the 200. Let's see what it looks like on the weekly. It's kind of a loosey-goosey stock. I like to be a lot tighter looking. ZS, and I'm not expecting to find a lot of great stocks after the market's been hammered. There's that Faro again. CrowdStrike, this is a stock that hurt a lot of companies at one point, and we're in the daily chart here when they had we have software that we make, and boy, when you make an update and you crash your customers' computers, it's not a good thing. They sold off hard, but they've recovered. And what a nice candle here. When did earnings come out? 3.8, or excuse me, 3.4. So I accomplished what I wanted to accomplish. I wanted to go through and show you 3 or 4 different ways to look at a list of stocks and try and bring the best up. Look, I think we're in a market where a little bit of nibbling makes a lot of sense. I've nibbled. Probably the happiest one I did, or the best nibble, and I talked about it when I did it on Tuesday. Palantir. This is a stock that I had been into when it was a lot cheaper. I took 2 profits, and I really wanted to get back into it. And you had a nice opportunity here. I bought it on the move up off the 50. It's had a nice move. I think this is one of the nicer looking stocks as well. So retracements in a downtrend. They're tough to make a lot of money in because the market still can go lower, so I'm always careful. But new bull markets have to start somewhere. I personally am not expecting that we're going to take this current spider chart and that we're going to go right back to new highs. I think we are going to have multiple battles. This is the diamond, not the spider, so let me change that. Not that the story's any different. Well, the first battle was taking out that 17-day. Done. Second battle was trend line. Done. Now, we got a big gap to fill in here, and at the same place that this 50 is dropping to. So I would not be surprised if we saw some element of resistance in this area. And we get through that in the 50, we got to 200. So the reason why V bottoms, I think, are so unreliable is because you have a lot of resistance. Have a great day in the market. Have a great weekend. This has been a fun ride this week. Boy, so much more fun than when we're coming down, at least for the bulls. Take care.